Hi, guys, and welcome to the 48th episode of the weekly trading wrap up, where we talk about the weekend markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. Okay, as usual, we're looking at the picture of the S&P 500. This red arrow denotes Monday, Tuesday, Wednesday, Thursday, and Friday. Basically a nothing week. This is what we should expect on OPEX week. It just chops around, killing longs, killing shorts. I mean, the intraday longs and intraday shorts. So what we have here is basically a consolidation day. Now, this is big because on Friday we had this big red candle. Trump comes in and attacks China on tariffs, puts 100% tariffs. Then over the weekend, everything's okay, and boom, Monday it opens up. Okay, so let's just get rid of this arrow because you know that this is the week we're talking about. And as usual, we begin with the technical picture. Okay, still bullish. Nothing has changed in my view. Let's look at the moving averages. As you can tell, we're holding the 50-day moving average, okay? Yes, we're below the shorter ones, but this is the important one, okay? It's been holding, a bull market has been holding the 50 the whole time up, and this is no exception. So, technically speaking, still bullish. Nothing really has changed, okay? So, as usual, we pair our technical picture with a sentiment, and this is where it gets more interesting because the fear and greed index is literally at 27 fear. Almost at extreme fear. Okay, which reiterates my point of you should be bullish. This is not what you see at market highs when the market is barely down. It recovered like half that 2.7% loss, 3% loss. It's literally recovered half of it. Okay, and we are at literally extreme fear and on the borderline of extreme fear. That's crazy. Okay, and what really solidifies this sentiment as being a little bit too scary and bearish is the AAII Investor Sentiment Survey. 46% bull, bear, and 33% bull. Remember last week we were saying that, yes, it's bullish, but there's still a lot of bears lingering above the historical bearish average of 31%, and that it's not enough. Like 3-4 weeks in a row of bullishness with still bearishness out there is not enough to get people all in this market. The sentiment is not extreme bullish. And we saw it this week. One little market drop, 3%. And this week, they immediately went back to bearish because the bullishness was not solidified. It has to be there for a long period of time. And simultaneously, the bearishness has to be really low. That's how you know sentiment is really, really uber bullish. And it's not. It was like, yes, we had the bullishness aspect, but we didn't have the no bearishness aspect to go along with it. And like we see today, this week, back down to bearish. People are still holding on to the bearish sentiment. Need I say we're just not even like 2% off the highs, maybe 1.5% off the highs? And the bearishness is still out there. Fear porn. This is why fear and greed index. Everything is almost at fear. Extreme fear, breadth, fear, fear, fear. Look at this. Safe haven demand. Junk bond demand. Volatility. Put call, fear. Everything is at fear. Okay, neutral. The strength is neutral. But you have everything at fear. These guys are still waiting for fear. Like people still have one foot out the door of this market, yet it's holding the 50. Everything is super bullish. So this is the key. I'm telling you, we haven't solidified the bullishness when it just takes 1 week for the bears to come back, crawl out of the woodwork and like spew their bearish porn on Twitter and all the other social media services out there. So let's just say that I'm still bullish. The technicals are bullish. The sentiment to me is very, very bullish because it's too bearish. And we're just 1.5% off the highs. Everybody's looking for a crash. And you can see the reasons that we're going to take out liquidity. This is like the most overvalued market ever, etc., etc. You plug in the variable. This is what I think is going to fuel this market even higher. I think we're going to, by the end of the year, we're going to go much higher. Okay. Do I have a target here? I think it was like 7. Yeah. Let's move it. This target was there before. Oops. Let's move it to here. By the end of the year, should be around the 700. The 700 to 720 area. I want to include it all. Okay, so I'm still bullish, and the sentiment is is making me even more bullish. So there you go. So let's go to our last segment. Let's keep this short and sweet. What really happened this week was a big hit in the gold space. Okay, just on Friday, Monday, Tuesday. I mean, gold is up from Monday to Friday, but because Friday was a big bearish candle on the gold market, everybody decided to sell the miners GDX. Okay, and you have massive fear. Look at this huge volume. It dropped at 6-7%. It's a big move. Okay? However, nothing is being violated. I haven't even touched the 50-day moving average. Okay, have a rule that when you're in a very strong uptrend and the first touch of the 50-day moving average is a buying opportunity, and we're not even there yet. Okay, we haven't even touched the 50-day moving average. Everything is super bullish. Okay, on the GDX, very bullish. I mean, if you dig into the big leaders like Agnico Eagle, which is my favorite, look, it hasn't even come close to the 50. It's still above the short-term moving average. And this move here is nothing. It's a 6% move, but look at it. If you look at the whole chart, there's absolutely nothing. Nothing to justify this fear out there in the space. Okay, what's the other one? Franco-Nevada. Okay, this one is a little bit more down, but still, it almost touched the 50-day moving average. This is like the first rule. If it ever goes down there, I don't know, maybe next week. If it does, maybe this was your chance. I don't know. This is a chance to buy Franco-Nevada when it hits the 50. There's your trade idea. Okay, you buy the first hit of the 50 on an uptrend. That's one of my rules. Okay, so gold space, to me, it's extremely strong, and nobody is in it yet. The sentiment there's no retail. Institutions are just barely starting to get in. Okay, there are some early movers in it. They're going to be the smart money, but really nothing. No institutional buying across the board among generalist investors. Okay, so that's gold. What about silver? Silver took a bigger hit. Okay, today it's down 4%, but it's still at $52. Okay, and nothing has been violated. Look at these moving averages, perfectly placed on an uptrend. It's not even close to its 50. Even if it touches 50, it will still be bullish. Maybe it'll touch, if we project maybe around here, it might, I don't know, it could go sideways. Who the hell knows? But this, to me, it hasn't even broken the first move. It literally touched the 10 and went back up. So I don't know where all this fear is coming from. I mean, you have like silver stocks like Hecla. It's down, but it's nothing, not even close to that. You have Kerr Mining, nothing. The uptrend is still there, not even violated the first moving average. And yet the fear is palpable. People are still waiting. This is good. This is exactly what you want to see. It's the sentiment equivalent of this, but for gold. So the gold and silver space, I'm still very bullish, looking to enter, but I can't because they didn't fall enough. So I just have to ride the down move. You know, you're in an uptrend, you ride the bucking bronco. Okay, you don't get off. This is why you should expect to see down 7% days when it's up what? From the breakout at 40, it's at 50, it's up like, 25% in a month, and it's just down from the highs of like, silver down 4% from its highs after being up 25. Come on. I don't know where I love seeing it, but relax. We're probably going higher. Just like with the market, we're probably going higher. Let's see, the precious metals, gold and silver's arch nemesis, it seems to be, is Bitcoin. I don't know why, but Bitcoin is a different story, okay? Bitcoin has gotten, it looked like it was going to break out above the 125 new highs, but then it got destroyed. Back down into this sideways consolidation and broke it, although this is a very encouraging wick. High volume wick is usually a bullish sign, okay? And it's holding the 200-day. Okay, the blue is the 200. So let's get rid of this to see it clearer. So if you look at it this way, yes, you get these moves down. Sometimes they violate this area, but it's not real. It's a ish area. It's a not written in stone. It's not 110. It's like 108 to 107 to 110. And so far after this day, high volume day that with a long wick looks like a bullish end, might be the end of this decline. We don't know. It has to get back into this consolidation zone quickly for the move to go back up. Our stock Mara, the one that we chose to play it, is acting actually better than Bitcoin. See, on Friday, this was on a Thursday move, yes, when everybody was getting destroyed. But this is an indecision candle on Friday, if you can see it. So maybe Mara is forecasting strength in the Bitcoin space. Who knows? So you have to monitor Bitcoin. Okay, it has to come back up here quick if it's to resume sort of its consolidation before going to highs. So that is way more dangerous of a stock. This is way worse of a chart, I should say, than gold. And yet the sentiment for gold after one down day in this whole week, which started here, up on the week. I think it started the week around 4,000. It's 4,240. 4,240. Okay, and people are freaking out. Gold can go to 3,000 and the GDX should be much higher. It's like the stocks, the gold stocks are printing money above 3,000. 4,000 is just cream on top of that. So, it's a tale of two cities. You have Bitcoin that's doing amazingly well. Not Bitcoin, I mean gold, that is doing amazingly well, and so is silver, okay, with just one down day on Friday today. Yet Bitcoin, not so much. Bitcoin is struggling to maintain within this area of consolidation, okay? It might continue to break down, who knows? We'll have to keep a lookout on that. And the other thing that really took a hit this week are the critical metals plays, okay? Specifically, my leader, MP, okay, broke out after the China-Trump macro wars that are going on, but for the past couple of days, it's been taking a hit, okay? It's still at $80. It's still up close to, let's say, right at the breakout point, but this is a classic move. If it breaks out, retests, and goes back up again, that's very, very bullish. It can go above 100. It actually touched 100 this week, that then went down, okay? You have other things like LAC, which were in, that took a bigger hit. This is like a Wednesday, Thursday, Friday. I mean, it was at 10.50 and now it's at 7. That's a big move. They're down 30% in like 3 days. You should expect to see that. How are the moving averages? Again, we can't really tell because it went up really high. The 50 is really, really low. It's at 450. You can get down there and still be bullish. However, what you do really want to see for Lithium Americas is for it to show some kind of consolidation before ripping higher, okay? I thought this was the day that it was doing, but no. So we'll just have to wait. We'll have to wait. I mean, we're still long up until January, so we'll see what happens there. And UUUU is another critical metals and uranium play. That also went down like LAC, like Lithium America, but recovered much quicker, okay? The RSI was overbought. Now it's back to like normal and still maintaining a series of higher highs and higher lows. So UUUU, Energy Fuels looking very, very good. So even though a lot of, what was the other one? USAR, that one took a hit. The rare earth stuff, it's more volatile, okay? Because after the breakout of the 20, it doubled. So yeah, you would expect it to be more volatile because, you don't double without being volatile. So you should expect that on the downside as well. So yes, the critical metals plays are getting hit, but you have to look at a place to enter these names because this is a long-term trend. Just like the gold trend, you want to look for a place to enter this trade. If you missed it, and not yet, it hasn't really hit the 50, maybe the best gold play would be Franco-Nevada when it does hit its 50. Okay, but others have not yet. And the rare earth space, MP, USAR, etc. I like MP actually here. Retesting of the breakout point could be a good place to enter. Okay. So you should be looking to enter these plays because these are long-term things that are going to play out for the next year or two. I mean, Trump is not going to change his mind. He's still going to be very protectionist on rare earths and other critical metals. And I will include silver in that. If Trump starts protecting silver, forget it. It's going to 100. So that's it. Like, the lesson here is don't freak out when gold goes down a bit after a big move. People still have one foot out the door, which is great. You have fear. Okay? And at the same measure, because, let's back up, the reason you don't freak out is because the underlying fundamentals for gold are still very, very strong. Central banks are still going to buy. It's a tier one asset right now for central banks, even in the West. And there's going to be there's a NWO, a new world order going on, and that's not going to change anytime soon. So you want to look to buy this space. Just like with the critical metals and MP, it's a fundamentally strong sector now, no matter what you think of the industry, no matter what you think of like Trump nationalizing assets, who cares? That's the story right now, and it's going to stay with us for a long time. Look to enter, look for technical reasons on the charts, if you're a technician, to buy into the critical metal space, whatever your stock is, and into the gold and silver space. That's the lesson here. So let's recap. I'm not going to recap the lesson on the gold and silver and the critical metals, but I will recap on SPY. Okay, SPY, super bullish, holding the 50. Sentiment is very fearful. Bulls just waiting to get bears just waiting to get bearish on any down move. Tells me that the bull train is not over yet. So that's it, guys, and I'm looking forward to next week. I think we start heading higher. I don't know. We could consolidate more. Let's see. It's going to be very, very interesting. Later.